The real estate industry is going to change dramatically on May 1st, especially if you pay your bills on time, especially if you care about your credit score, and especially if you really care about having no negative comments on your credit report. Because you know what? We're trying to have a good interest rate, right?
What's your credit score?
420.
I didn't ask you what you wanted to do today. I said, what's your credit score?
But the Federal Housing Finance Administration is going to impact you negatively if you have a good credit score. And you know what? They're going to give those extra funds to diversify for the low credit scores to give them added benefit. Sounds fair, right? My name is George Rodriguez with eXp Realty, located within Washington State. And if you're trying to buy and sell real estate here, hey, you know where to come and you know you get taken care of. Let's talk about this bombshell that's going to be occurring on May 1st. That's going to affect the real estate industry as a whole, across the whole United States of America. But let's get into it. The Federal Housing Finance Agency, I know a lot of words there, the FHFA, basically the federal agency that basically governs Freddie Mac and Fannie Mae. These are the two entities that are basically funding most of the loan programs in the United States of America. Almost close to almost 90% of all the loans are going to be run through these entities. Now, the FHFA has now decided to take action and now hurt those with good credit scores and apply more fees, and then also give that benefit to the low-end credit scores to give them less fees on their home ownership. It's kind of insane when you think about that.
What?
Now, there's actually a way to get around these changes that are going to be starting on May 1st, and it's actually going to be getting a loan program that is not going to be funded by Freddie Mac and Fannie Mae. How do you do that? Well, you have to go to the government-backed loans. Of course, that's going to be your FHA, and then also, if you're a veteran like myself, going to a VA loan, as their changes are not going to be affected by these new things being put forward by the FHFA. So having a conventional loan is going to be actually a little bit more expensive if you're trying to go that route. I know not everyone is going to be eligible for a VA loan. FHA may have a huge increased demand due to the upfront cost to actually get into a home. Let's just say you have a good credit score, but your income is not that high. Well, they don't care.
Now I know you all are tripping.
You have to find a way to get around this, and you may have to do what is best for yourself. Let's go ahead and look at some articles that kind of give us more background information. Now, this is from Yahoo Finance. Under the rule, homebuyers with a credit score of 680 or higher will have to pay about $40 per month more than people with those with worse credit. Now, this is going to be on a $400,000 home purchase on average. Now, high credit consumers with scores ranging from 680 to above 780 will see a spike in mortgage costs, especially those with large down payments of 15 to 20% down. Now, this is kind of insane to think that they're going to penalize you for actually putting more money down. Now, let's go over to USA Today, and right here we can look. It says, for example, if you have a score of 659 and are borrowing 75% of the home's value, you'll pay a fee equal to 1.5% of the loan balance. Now, before these changes, you would have paid a 2.75% fee. Now, it says on a hypothetical loan of $300,000, that's a difference of $3,750 in closing costs. Now, just imagine, here in Washington State, the average home value is around $500,000, but let's just say, make it simple, someone purchases a home on a loan for $600,000. Now, that is going to be saving you $7,500 if you purchase after May 1st. So it's kind of insane. For those that have the low credit scores, you now have an increased ability of actually saving money going in, but now those with the better credit scores are actually taking the brunt of the force. They talk about the higher credit scores down here. On the other end, if you have a credit score of 740 or higher, you would have paid 0.25% fee on a loan for 75% of your home value before May 1st. Now, after May 1st, you're going to be paying 0.375%. Let's look at the context if you're going to be living here within Washington State. So let's just say you're going to be purchasing a property of $500,000, which is you're probably going to be doing that here. So we have $500,000 here, right? And let's just put in what you're going to be paying prior to the change. That's going to be at 0.25%. Your costs for that loan are going to be at $1,250, and part of your whole down payment and closing cost of, the whole thing. Now let's go to the change that's going to be occurring now after May 1st. So we have $500,000, and let's go ahead and change that to 0.375%. So 375. So now you're going to be having a change to 1875. Now, looking at it, does it feel like a lot? No. But when you've actually taken care of yourself to proceed forward and have a good interest rate and to save up money, it's kind of crazy to the fact that by doing all the right things in which you were coached to do, you're now going to be charged more for doing that right thing. Insane. How does this make you feel? Does this make you feel like the home buying process is going to be that much more affordable? Does this make you feel like they're doing the right thing? In my humble opinion, hell no, not a damn chance. The fact that they're using your credit score as a reason to assume that your financial stability is better than somebody with a lower credit score is insane. The fact that they're going to penalize those with good credit scores to pay more to give that to the lower end of scores is insane. Yes, you're still going to be paying less than those with the lower credit scores, but it seems like it should be reversed. They should be benefiting those that have taken the actual time to make sure they pay their bills on time, to ensure that they're doing the right things, because that's how we're honestly raised in terms of making good financial decisions. Will this create a housing market crash? I know some may think that, we're going to give lower closing costs to those with the lower credit scores. Personally, I still say no, because they're still going to be assessing your financial stability on what you can afford. So of course, they're not going to be able to purchase homes that are going to be above their perceived financial price range. It's just going to be affecting how much closing costs it's going to take to actually get into the home itself. If you found any of this information all helpful, do not forget to like and subscribe. Do this every week. And of course, if you're buying or selling real estate within Washington State, contact information is down below. And let's get you taken care of and smoothly through the process of home ownership. You guys take care.